Please don't crash. I'm a little late, and the reason is OBS crashed, and today is, by the way, Monday, July 15th. I'm live. I just got the email. My computer was messing up. Content. Let's go back and let's live. We'll monetize this. Morning, Chris. I know my ass is going to crash again today, so just get ready for a, I want to see what the screen looks like because I had to redo it. There we go. Boom, boom, boom. Let's see what the... Boom. Let's see what TrendSpider looks like on the screen. I think it looks okay, but we'll go back down to Safari. I think it looks okay. Morning, WVF. Morning, Star. Morning, Joe. There's a lot of green. If you bought the dip on NVIDIA, you did great. If you bought the dip on SMCI, you're doing great. If you bought the dip on Uber, you're doing great. If you bought the dip on United Healthcare, you're doing great. If you bought the dip on Roblox, you're doing great. If you bought the dip on Palantir, you're doing great. If you bought the dip on Lily, you're doing great. New free Substack. I got to turn on the Do Not Disturb. Okay, there we go. Let's do some scans. I got a ton of stuff to go over. And it's going to be a jam-packed show. There's a lot. I mean, there's just a lot to unpack from this weekend. Just to get it out of the way, no, DJT is not a, oh my God, I've got to buy it. It's getting into the core portfolio stock. It is tradable, but I'd rather see you trade, just to get it out of the way, I'd rather see you trade Bitcoin. And MicroStrategy. Cleveland Cliffs is buying. Ironically, Joe, Cleveland Cliffs smelting plant is like 3 miles away from the assassination place in Pennsylvania. And crypto. ARKA, ETHE. But they're buying somebody, and so my guess is that dip is probably buyable. But again, that you know, there's a lot of shit that's weak in this economy. Let me see brokerage holdings. Did I do any of them? Morning, Blake. I sold out of Costco. Tesla was up at like 260. It's above 257 right now. Coke and Mara. Mara's one of my holdings. It's a small one, but I am holding Mara. But, you know, listen, don't follow me into investments because I'm down like, 10, 15, 20% on that one. Morning, Travis. Covered call, energy names. And I think Cleveland Cliffs, by the way, we had a buy at 13, I want to say, on this one. We're still in that one. I can't see it on this one, but oh God. Energy is flying. MRO, XLE, CVX, COP, Boyle. Joe, your Boyle strategy might be in play in that, oh God, leveraged ETFs, TSLQ, UVIXI, UVIX, NVDS, ironically, AAPD. Everything's pointing down, but they're all down. So, low cost Vanguard. Let's see if any Vanguard. Nope. Let's see if Spider Sectors, we know XLE got in there. I'll put this one up here. Energy's, I mean, don't fall asleep on energy. I think energy is Coinbase, ELF, Booking, Mara and ETH already got up there. Let's go to the Dow. There are some pretty interesting movers in the Dow today, too. Visa, CVX, Disney, I have it up there, and Cisco. Let's look at the NASDAQ, which is going to have a bunch. Charter, CMCSA, Workday, Take-Two, Starbucks, Marriott, Keurig, Dr. Pepper, and O'Reilly Auto Parts. Woo! S&P. Morning, Laurel. CVX, COP, LMT, ACN, Disney, Cisco. Okay. I'm going to go back to the strategy tester. I have not played with the new, that weekend newsletter took me a long time to freaking write this weekend, so I didn't get a chance to play with the new indicator from TrendSpider. Don't fall asleep on Meta under 500, by the way. That one. So here, 1478. You got to 16. You pulled back to 1565. It's down 3%. You are 1580 is the confirmation line. So my guess, again, that 50 days kind of moving there. They've got earnings coming up July 22nd. I don't know. Would I buy here? Average gain 7% in this. And it's up about 7%. I'd probably get out, to be honest with you. If you got Cleveland Cliffs in on this trade, I'd probably get out and just see what today's action does to it. But we're in a pretty good upward trend here. I mean, God. Okay, let's open up some stuff. What are the best chips to invest in right now? They asked Seeking Alpha Analyst. It's a great article. Great article. Banks overall seem to be doing better. We'll go over BlackRock and Goldman Sachs, and they beat. New Motley Fool buy. I'll go over this stock. I'm not sure this is, I mean, this is what Motley Fool gets you for Ralto. It's VLTO if you want to look it up. Again, I'm not a huge Motley Fool fan. Google's biggest acquisition, cybersecurity. That's huge. New alpha pick today. And they actually removed one. Let me see. I'm going to look it up on my phone. They yell at me. I can't show the new alpha picks. So they yell at me and I'm not supposed to show them. So I don't. Alpha picks. Let's see. Pop quiz. Guess the new Alpha Pick stock. That is one. It's healthcare. I would never find. Wow. Let's see. Year to date, this one's up 20%. Over 1 year, it's up 87%. And the valuation is still strong. God. Listen, if you want Bitcoin, and I'll point it out, MicroStrategy, a healthcare stock I would never have chosen, up over 80% for 1 year. We're going to go over Alpha Picks had a removal. I will include it in the newsletter. That one, they haven't yelled at me about removal stuff yet. Steve Kress posted a new podcast. These are the top second half stocks. If you want to listen to him, I mean, he's really a good listener. This is my, by the way, my own personal Spotify list. Italian dinner jazz. Let's see. Richie Sambora, jazz songs, deep sleep, investing experts, something corporate, workflow, on the tape podcast, daily stock pick, all in, and compound with friends. So you get a little look at what I listen to. Catalyst watch for this week. Yeah, okay. Fear and Greed Index. This was an interesting one that I just saw, and I'm going to bring up Delta from last week too. I read a little bit more about Delta earnings. Morning, Mike. Morning, Mark. Biggest stock movers today, DJT and crypto stocks. Trump trade. And my schedule this week. I thought I could have. I thought I put in MicroStrategy. I thought I did. Let me see. Twitter. I'm going to go to my profile. Afternoon ESSA. I don't know if afternoon. It's probably afternoon in a different time zone. It is 8:47 on the East Coast here. So welcome and thank you for spending your afternoon with me. Because I did post, let's see, this MicroStrategy alert. From Haktua. My weekly Savvy Trader stuff. NVIDIA. This was 4 days ago, so I'm kind of looking back on this stuff. Where is my MicroStrategy alert on here? There is 19 hours ago, so it's back this way. Oh, yeah, it's after this stuff. Oh, come on. Do I have to refresh this damn thing? God, Twitter, you can't go back. You can't keep loading up here. Morning, Scott. Oh, 3:47. Hey, so where you at? What up, Andres? I'm looking for my MicroStrategy alert from TrendSpider because I know I posted this 4 days ago. Okay, yeah. Stock market talk. There's the dude. posted this damn thing. There it is. Whoop, there it is. Copy link. Let me see. Vertiv. Apple. Oh. Monday. There we go. I was looking at Friday for some reason. Oh, yeah, I did. I had the link here. Okay. Biggest stock movers. Fear and greed. Okay, where is this? Okay, let me close this down. Okay, Burberry. There we go. Burberry. Then MicroStrategy. I guess I missed this one. And then we get, okay, I'm going to pause that. Then we get the biggest stock movers of the day. And then we get the Trump trade. These are 5 stocks for the Trump rally. Then you get Trump media. And then my basis schedule. GameStop, it's worthless. I mean, here's the thing. GameStop is a stock that they now have like, what, $2 billion to do something with, but Ryan Cohen hasn't said what they're doing. So if you want to trade GameStop, here's the 4-hour algorithm. It got you in at 24.18 right here. It's at 26. You go and you look at the weekly of this, and I talk about this all the time. A bottom left to upper right. It's kind of hanging on that 200 day, but the actual stock, ASA, if you go and look at GME, it's not good. It's actually very bad. I mean, it's a strong sell from Wall Street. The quant as a whole. The valuation makes no sense whatsoever. The valuation here, they're not making money. They're losing money. They have no forward growth plan. Their growth, they're losing 16%, 15% revenue year over year. Profitability, their actual margins, is it 0%? Let's see, gross profit margin, 25%. Leverage free cash flow, they're losing 5% a year. Revisions, nobody likes it. I mean, nobody covers it. So it's not very good. So as far as an analysis of what you want, I mean, trade it. If your kid wants to trade it, if your son wants to trade it, go ahead and trade it. But it's not a buy and hold stock. It's just not. Until they give you some type of plan of how they're going to do revenue and how they're going to take that money and actually use it, it's nothing. I mean, it's nothing. It's nothing more than, it's nothing more than DJT, honestly. It's DJT with money. That's the difference with money and a product, because at least they sell video games. DJT sells nothing. There's Waffle House locations with more money. More revenue than DJT. So I would argue your son did a better job of buying GME versus DJT, but GME, he should. Honest Asa, here's the guidance for your son. He should have bought Reddit instead of GameStop, because what platforms is he on? Why is he buying GME? The question is he buying GME because of the talk on Reddit? Because if it's the talk on Reddit, buy Reddit. He's using Reddit. He's not doing anything. So, yeah, I mean, that's part of learning, Asa. As long as he's not blowing up his account on GME. Again, the talk about, oh my God, it's going to explode. Until Ryan Cohen comes out, and honestly, at 25, the valuation's not crazy with the amount of money that they have, but they haven't said what they're going to do with it. So part of Wall Street is actually trading on earnings, and they haven't announced anything that they're doing. So they're going to continue to lose money, but they have tons of money in the bank. So at 25, it doesn't make sense to do anything other than trade it. Say they announce what they're going to do with that money. Say they announce some crazy innovative digital platform. I'd rather trade that and buy it as a long-term buy and hold at 40 than at 25. And the reason is I'll trade it at 25 if the chart looks good. So your son should understand charts and look at charts, whether he's trade. And on GameStop, I would do a 5-minute chart. That's what I would do. And Finland has 24-hour daytime. I've wanted to go up there and look and be there, but I haven't. Kudos to you for living in that extreme environment. We are sweltering 100-degree heat here, so. Okay, I'm going to go. I've kind of outlined exactly what I'm going to go over. I'm going to go over spaces. Here's my schedule. Then Trump. We're going to go over Trump. I'll give you some, some stuff on that. We'll go over Bitcoin. We're going to go over some charts. And I've got a lot of notes. So stuff that I'm not necessarily bringing up. Okay. Core portfolio is going to do really well today. Okay. I'm going to hit record. Hopefully I don't crash. Good morning. It is Monday, July 15th. We're halfway through July. Listen, July just started. Just so you're aware, I am traveling early next week. There might be podcasts, there might not. I am traveling. I am going to North Carolina to do a soccer game. It is the European stuff. I will be traveling for about the next, few on and off the next few weeks. So stay tuned. Sign up for the newsletter. And how do you sign up for the newsletter? You just go over here to the link tree. It's down below. If you're watching the video, the link linktr.ee/dailystockpick. And it's the 5th link here. And it's free newsletter, 100% free during the week. I do charge on the weekends, and thank you everybody for supporting me. That's exactly what I do is, hey, I give it out for free. I want to give back. I've been blessed in this world. I give back during the week. The weekend is just for people who want to support me a little bit more. This weekend, I posted some stuff about finding underperformers that will outperform in the second half of the year. We'll go over that kind of stuff. But again, that's what you sign up for. I will promise that I will post at least one newsletter a day when the market is open. And on the weekends, I do the paid newsletter. So if you're interested, go over there. Here's the Qs. Where are we? Friday wasn't a bad day. We're at 494 on the Qs. We're up 0.36. It was soaring earlier. It's not really soaring. Again, on this 4-hour chart, the MACD is crossing down. It's not going up. We have a resistance level at about 500, the previous high at 503. You could be soaring in there here in pre-market. You're 496. Expect 500 to be about your resistance level. Again, we're extended. If you look at the 4-hour, we're extended. The RSI is coming down, but we're still extended. On the weekly, we're extremely extended. The RSI, in fact, is at 73. You have confirmation above. We are in a bull market until we're not. And that's the reality of the situation, until we're not. Again, there's some major things going on. We'll talk about it. We'll talk about NVIDIA. We'll talk about Apple. We'll talk about Google. There's a lot of stuff that I'm going to go over. A lot of this stuff's notes, so sign up for the newsletter. Now, I'll be on Spaces. Wolf Financial was nice enough to include me in 4 Spaces this week. Today at 3 p.m., tomorrow at 3 p.m., Wednesday at 2 p.m., and Thursday at 2 p.m. There's the people that I'll be on with, then the topics, or stock market analysis. There is the earnings on Wednesday is the earnings, and then Thursday is tech ETF investing. So I'll have some stuff there, to talk about on the Spaces. Most of it you'll have heard here. I mean, I don't talk about anything on Spaces. I don't have anything specific on Spaces. It's more about just getting in front of a larger audience. Trump media skyrockets 70% as markets reopen following assassination attempt. Here's my thoughts on the assassination. I got a ton of questions about should you own DJT after this? No, it is an absolutely worthless stock. Again, there's Waffle House locations that make more revenue than this company. Here's my thoughts on the Trump assassination attempt. Horrible, incredibly bad. My hope is that Donald Trump turns this into a 9/11 moment and not a January 6th moment. In my mind, that all depends on how he treats it. Remember how, if you're old enough, how Bush united America. America was divided at the time. Then 9/11, Bush was our president. United. You don't fight against fellow Americans. The word fight scared me a little bit, but I understand at that moment, I'd probably be pretty pissed and yelling as well. But DJT, it's a trade. It's worthless. Don't own it. Okay? Trade it today. I'm not going to go over the chart. If you don't know charts, you should learn the charts. But you should absolutely go over and just learn the chart. But it's absolutely a worthless stock. Trade it. Don't own it. Top movers today. Or I'm sorry. This is, we're staying on the Trump trade. These are 5 stocks if Trump wins the election. This is from Steve Kress, the creator of the Seeking Alpha Quant and the head of the Alpha Picks portfolio, which we'll go over. Again, these are 5 stocks if he wins. You can go over those. Go read that article. It'll be in the newsletter. Now, here's the biggest move of the day. It's DJT and crypto stocks. I just want to point out that 4 days ago, I said buy MicroStrategy. Again, MSTR is the symbol. It is a triple levered ETF on Bitcoin. It is a company that makes money, but what they do is they take out loans to buy more Bitcoin. And I got an alert on TrendSpider. It is an absolute game changer. If you don't have TrendSpider, you should absolutely get it. Again, this one is up, let's see, it is up 7%. It's at $1,500. I will be buying more of this. If you haven't bought this, it is a triple levered ETF. I traded on this 4-hour algorithm. The 4-hour algorithm makes you 508% over 24 months, okay? Yes, you make more with buy and hold at 645%. I would argue any type of highly volatile stock like this, I would rather make 508% than get caught in a downturn with a buy and hold at 645%. Your average win on this is 44%. You win 43% of the time. There's no reason not to take this trade. Now, you might say, how do I get the 4-hour algorithm? You go over to Linktree. It's this top link. Sign up for TrendSpider. You sign up for TrendSpider. It's less than $50 a month. It's at $53.50 a month. $642 a year. If that's too much and your portfolio is not that large, just get a charting software program. I was asked this weekend, is there a free trial on this? A, no, TrendSpider doesn't have free trials. They never have a free trial. B, I will not give you my 4-hour algorithm on a freebie and just have you play with it. Listen, I don't monetize much on here. One of the things that I monetize is my partnership with TrendSpider. And yes, I'm an affiliate, and yes, I gain if you buy this. But the difference between myself and a lot of people is I ask you, if you support me, then pay for the newsletter. Yes, I give special tips on the newsletter and its benefits. The reality of what I do here on this podcast is I partner with tools that I use to create my system. So my system is very simple. It's TrendSpider, the 4-hour algorithm. You can see it right here on MicroStrategy. It tells you when to get in. It tells you when to get out. Okay? My second fundamental thing is Seeking Alpha Premium. And again, both of them are available. You save $25 with this second link. We'll go over this. As I go over this, you'll see more. But again, I got this alert. I posted it on Twitter. So you should follow me on Twitter because I post stuff like that. And you can take a look at this. So MicroStrategy was a good one. Now, last week I talked about Delta. Delta said last week they had built up too much capacity for the lower end, and they had to bring prices down because demand wasn't there. That's a simple market strategy. I've talked about how the consumer is stretched. This one, luxury retailer Burberry, has suspended its dividend and its CEO has been fired effective immediately. Burberry stock is down 60% in the last year. This is a European brand. I'm not going to go over the stock chart, but it's a European brand. But the key point is that other consumers are being stretched. So when we talk about, I want to talk about, this one too, the Fear and Greed Index. Welcome to greed. This is a CNN index. This is 100% just, it is a good level of, hey, where are we right now? We were at neutral and you were at fear as the market was going down. Now you're in the greed section. That usually means, and remember Warren Buffett's famous quote is, be fearful when other people are greedy. Be greedy when other people are fearful. So if you're down towards zero, you want to start buying, according to Warren Buffett. If you're up here past 50, then you want to start looking at protecting your portfolio. Now, I will tell you that the big thing is, the other thing, the famous saying is, don't fight the Fed. Let's talk about what the Fed rate is. I think it's somewhere in the neighborhood of 5-6%. So it might be up at 7%. I'm not exactly sure. But I wanted to just point out how that calculation comes. So if you have 2% GDP and your inflation rate should be 2%, and that's what the Fed says, that's a 4% standard rate. And so the Fed rate should be standardized at 4%. Yes, we got greedy and we got comfortable with it at 0%. We got comfortable with it at 2%, and we were still growing. But in reality, if you have a target of 2% GDP and a target of 2% inflation, the Fed rate should be at 4%. If Jerome Powell is now saying, and I think this is what he's saying, they're okay with 3% inflation. Okay? If 3% inflation and 2% GDP, you just move that Fed rate normalization from 4% to 5%. Why is that okay? Well, the reality of the situation is that the stimulus that we had over COVID is going to take about 10 years. Every economist that I read, that I talk to, it's going to take 10 years to get out of the system. So in my mind, I think they cut in September. The July meeting, July 31st, I don't think that they do anything, but I think they indicate that they do it in September. So that's it. What do you want to watch this week? Here's my favorite Seeking Alpha article. It is the Catalyst Watch. Netflix, Taiwan Semi, Amazon, and HashiCorp are in the spotlight. Okay, Volatility Watch. You can do SOUN, ZAP, ZAPP, Tesla. You can look at all that. Notable earnings today, Goldman, BlackRock, they already beat. They announced all day. Broadcom will begin trading. It's split adjusted 10-for-1. It already took place. So expect volatility. Robinhood CEO speaks. Today earnings watch. Tomorrow we've got core portfolio, United Healthcare, and Bank of America. Okay, you've got Morgan Stanley, which I personally own as well. All day notable investment include Charles Schwab, business update. Rio Tinto is having some stuff. All day Prime, Amazon Prime Day starts on Tuesday. Starts tomorrow. That's going to be bullish for the stock. But when you get to 200, Jeff Bezos is going to sell. I think that's the best trade in the world. Buy it under 200. When he stops selling, it's going to be huge. Earnings watch, ASML. We've got J&J. We have United Airlines. You've got MGM all day. Will close its Las Vegas casino. They were giving out millions of dollars in rewards. 11 a.m. Jamie Dimon talks. Thursday, we have Netflix. That's what this weekend's newsletter was about. It's about Netflix. How are you playing those earnings? How am I playing those earnings? I own the stock. What am I doing with it? We've seen Netflix, by the way, take a little dive down. Is it an opportunity? I went over it in the newsletter. I'll leave that for the paid subscribers. Here on the 4-hour algorithm, I pointed out many times before, freebie here, the all-time high is 700. It's the only grade 8 stock that hasn't hit its all-time high, hasn't gone back to all-time highs. It's the only one. So your RSI is at 33. Your MACD is down at the oscillator. You make your pick. 4-hour algorithm has you out. A great trade here. What was it? 48%, 38, 18%, somewhere in that neighborhood. I don't know. You win 39% of the time. Your average win is 16%. If you want to trade this one, you make 124% in the 4-hour algorithm. Now, one that I sold, and Savvy Trader folks know this, Costco. Costco, because the algorithm told me to. I sold out because of the extended valuation. There's a lack of catalyst here. And this is why I sold out. I don't think that this stock is going to crater. In fact, it's up today. I think I sold out 845 and it's at 847 today. Am I upset? No. There's a couple of reasons I sold out. I don't mind getting back in if the algorithm tells me to get back in. This is in a retirement account. There's no tax event for me. So I am perfectly comfortable with getting out. Did I get out at this 17% gain? No. It told me to get back in. Did I buy more? I wasn't comfortable buying more. And why wasn't I comfortable buying more? Well, the reason I'm not comfortable buying more is 100% the valuation. Again, this valuation is extended. And we lack catalyst. I said, as they raise membership rates, you're going to see the stock pop to 900. It did. Is it getting back to 900? It might. But again, the lack of catalyst here and that it's gone for such a run, I don't mind getting back in if the algorithm tells me. But long term, when we take a look at the valuation here, this is what I want to point out. Their valuation, their PE is 52. Their forward PE is 52. Are you paying 52 times earnings for this company? That's just crazy. The PEG, even their growth, it is not sustainable for this share price. So momentum, A+, revisions, A+, profitability, A+. But when I took a look at some of the peers, and we go over here to Seeking Alpha, and we look at the peers, and I look at Walmart, which is where I shop on a weekly basis for my groceries. Okay, look at this price return. Over 1 year, Costco's up 60%, Walmart's up 33%. If we just look at year to date, Costco's up 27%, Walmart's up 31%. I think Walmart has more room to go. And if we just look at, let's look at the valuation here. If we look at the PE, Costco's trading at 52. Walmart's at 28. Forward is, 28. Again, 51 versus 28. I want Walmart. And so my portfolio has a small position in Walmart, which I consider a buy and hold. But that's why I sold out. That is portfolio management. So again, the Catalyst Watch, Netflix, Costco, you can do all of that stuff. Steve Kress has a great podcast out, and it's the top 10 stocks, second half. I'll link to this in my newsletter. One that I want to make mention of is I had made mention the other day while I was looking at my Webull portfolio. I had some Ford stock. I'm not a huge Ford fan, but I want to point this out. It's because it was trading so well, I bought 3 shares. It's not a lot. Again, that's less than $100. It's nothing. It's nothing that I would say, hey, I'm going to put this into Savvy Trader. It's nothing that I'm going to put into my newsletter. It's just 3. But I did want to point out the Webull account. The Webull account has grown to $7,000. I tend to make larger bets. I took my sports gambling. Okay, say you sports gamble. I never made money sports gambling. It was basically I would throw money in at the beginning of the NFL season, $250, $500. I would lose that by the end of the season. And sometimes I would have to re-put in more money. I don't do that anymore. I just put money into Webull. And if you want to join me on Webull, just click this 4th link. You get free stocks when you sign up. But I wanted to point out Ford because this has turned into one of my best trades, ironically, of the year because it's up so much. I was loading up down here at $12. Again, it's 3-4 shares. It's not much. I bought 1 share all this time. When it hit this first one, I said, you know what? I'm going to buy 1 share. It came out. And then I said, you know what? It's kind of putting in this bottom at 12. I liked it to get to this 14. I like this. I really like this. I tend to take larger bets than this, but I missed this. And I'm sorry that I missed it. Yes, we were all focused on Tesla. I mean, that was one. So, but this was one I just wanted to point out. It was, somebody asked me about it and I said, hey, it's not much. I don't make mention of a lot of stuff that I do in Webull anymore just because it's my betting account, but it has gone from $1,000 to $7,000. I put that in, I think at the beginning of 2022 is when I put 1,000. It might have been 2023. I don't quite remember. But if you want to sign up on the link tree, there's a link to get free stocks. Alpha Picks. There's a new alpha pick today. It's Monday, July 15th. It's one I would have never guessed. I can't tell you what it is for 3 months. They have restricted me from telling. I am an affiliate of theirs. How do you get alpha picks? Well, you go over here. It's the third pick. And I always say, I'm not a huge fan of buy and sell kind of trigger alerts, but this stock portfolio that's up 122% versus the S&P that's up 35%, in my mind, that's something to look to. And they have a new healthcare stock today that I would have never chosen, absolutely never have chosen. It's up 80% for 1 year, up 20% year to date. They think it's got more room to go. What they do is when you get alpha picks, you get an alert that, hey, there's a new alpha pick. It's on the 1st and the 15th. They give you a full analysis. If you don't know how to analyze a stock from a fundamental standpoint, this is your go-to. If you just want a portfolio that outperforms the S&P, this is your go-to. Because what do? They tell you when to sell. We got an alert on a sell from Alpha Picks today as well. So not only did you get a buy, but they said, hey, there's one stock in our portfolio that's not performing well. That's Valero. VLO is the symbol. Valero, it was added July 1st, 2022. Has a hold rating for 180 days, warranting the closeout of its position. So let's go back and let's look at, it was July 1st, 2022. If we want to look at this, where was that? Let's take a look here. It was July 1st. Let's point it out. It was trading, looks like it's about $100. $100. When they get out, 49, 50% gain over 2 years. Not bad. Again, that's the Alpha Picks portfolio. They tell you when to buy. It's on the 1st and the 15th. And what they do is they just send it to you. I would argue that when you buy, you should have actual, TrendSpider or some type of entry program. But with this one, the algorithm probably saved you even more money. I mean, at this point, I would have said, hey, you want to get out of this stock. Portfolio management. A upper left to bottom right trend does not point well. And oil wasn't doing all that well. Will it turn around? We have a bunch of energy stocks that showed up today. Down movers today, United Healthcare is up. Let's see, 1.82%. I have said this one is in the core portfolio. Their earnings are coming up. This is one of the top Dow gainers today. It's in an upward trend. I'd say buy it under 500 and sell it over 500. Why? Take a look at this weekly. It is in a range. And that support right there at 450, it has been a super support for you to add to this stock. Over 500, I don't want to buy this heading into earnings. I'm a little bit nervous about this one, but that's one. Another big mover we'll talk about a little bit later, Apple. But one that I wanted to point out that is a big mover today is one that actually has been not performing all that well in recent past, but it's Caterpillar. And so you can see from here, $380, and we've gone down. One is this one's up. Let's see. In pre-market, it is up. You can take a look at some of the catalysts if you have Seeking Alpha. You can take a look. This one is up 1% today. The algorithm has you in at 333. It's trading at about 339. I would argue this 200-day at 344 might provide some resistance. I think your extreme support down here at 295 provides some. Your losers, Amazon, Microsoft, and Travelers. Simple as that. Now, let's see. Sell the rips. Oh, and buy the dips. This is all Apple. I want to show this one. Supermicro. Supermicro to replace Walgreens in the NASDAQ 1000. Supermicro is up. Supermicro is part of the core portfolio. You might ask yourself, well, how can I see this core portfolio? It's free on Savvy Trader. Go over to Linktree, and here on Savvy Trader, it is free to follow. This is the core portfolio. It's 35 positions. And how do we compare it? Let's see year to date. Let's compare this. Savvy Trader is the best platform to manage your portfolio and see how you're performing. Just year to date, this core portfolio is doubling the NASDAQ, almost doubling the NASDAQ. We're up 37%. The NASDAQ is up 20%. Again, the core portfolio, one of the core portfolios is Supermicro. It is about to replace Walgreens in the NASDAQ 100. Let's take a look at the stock chart. When did you get in? Well, here at 918, this is a good one. As far as Supermicro goes, we've talked about this weekly. how it's setting up for its next move higher. This was a 4-month run all the way from June all the way to January, where it just kind of sat there and traded in this range. I'd argue this is doing the same thing. Now, I would also argue that this move to the NASDAQ 100, I think this sets this up with a split. I think they announced a 10-for-1 split to get it back to 100. Simple as that. I think that's the way you look at it. Let's take a look at Apple. Well, you know what? Let's take a look. I don't think I clicked on these things. Oh, I did want to point this out as well. On X, this is from TrendSpider, and they point to here. They point to SMCI setting up. Again, same thing I said, is that this chart, this will be in the newsletter, but this is a chart that shows SMCI ready to rip to 1,000. This is a daily chart where it's just kind of sitting there and going up. It's capitulating. It's a stair step. Simple as that. Meta, it dipped as analysts point to ongoing weakness in e-commerce as. I would argue it's a weak consumer stock, but Facebook is still the king when it comes to actually target marketing. They just let Donald Trump back on. That wasn't a catalyst. But many people were saying, well, that's going to kill it because nobody wants to be on Facebook. Again, I point out, if Trump is the 9/11 leader instead of the January 6th leader, I would argue Facebook is probably going to soar with ads that they'll put on there. Does he love Facebook? No, he hates freaking Facebook. Is he going to go on Truth Social? Absolutely. It still doesn't mean you invest in DJT. But Meta dips as analysts point to ongoing weakness. I would say buy it under 500. Here is one. Vertiv drops amid new short idea. This is one that I bought and I led folks into, and I said, hey, I'm buying this one. It is one that was a strong buy in the quant, and it's one that I bought at 93, and I've said, hey, this 89, this $90 level is a pretty good support level right now. Now, it's trading right at 90. This is a short idea from them. It kind of points out this is where comparables to the previous year and the previous quarters come into play, and that's why they're shorting it. The pace of data center construction has slowed in Q2, which isn't a good sign for VR2. That's what they say. And so they're shorting it. It fell 3% on this short. From a quant standpoint, the stock is a hold. It moved from a strong buy to a hold. We can take a look at that. It's been a hold for a while. But Wall Street says it's a strong buy. And where's the price target at? I think it's at 120, 102, 14% upside from here. So that's what I'm trading this one for. That's what I like. That's where I'm kind of going on it. Now, NVIDIA, price target raised. Just keep buying it. Just keep buying it. Again, NVIDIA price target raised for AI demand. I added to it last week. I will add to it again this week. It's at 131. I think my initial buys were at 133. Well, I'm sorry, initial buys. I have a large position in this one that has continued to grow. Continued to grow. I will add to this one, and I put this out on Twitter, so you should be following me on Twitter. I put out that I will be adding to NVIDIA. UBS said last week, demand momentum for NVIDIA Blackwell rack scale systems remains exceedingly robust, and the order pipeline systems is material larger than just 2 months ago. I will be adding to NVIDIA. That's as simple as I can do it. Now, let's look at, I don't want to look at that one just now. I want to look at this one. And then we'll look at this one because Apple in election years, and again, this is an election year. So you want to kind of, TrendSpider allows you to pull out certain years and look at this. 82% win rate. In the month of August, average return, 8.97%. That's going back to the 1980s, 44 years. Now, it's 44 years, but it's just election years. Again, up 8%. Do you want to own it? Today, it's up 1%. Why is it up? India's sales climbed 33% to $8 billion. That's from Bloomberg. That's why it's up today. Again, they climb a ton. You want to be in these stocks because all of a sudden they start climbing. There's a new indicator from TrendSpider. It's called Relative Performance Indicator. This is Apple. I mean, look at how well you can do with Apple. with just this relative performance indicator. I have not, again, this is one that I haven't played with, so I haven't gotten my arms around this one completely, but this is Apple. Look at how well this indicator works. It tells you here, this is the relative performance indicator. Ooh, you want to sell? Look at the price. And then look at the price action. Ooh, you want to buy? Yeah. Ooh, you want to sell? Ooh, you want to buy? This is how simple TrendSpider makes trading. You know, again, I didn't know a lot about technical trading until I got TrendSpider. I don't use half of what TrendSpider does, but TrendSpider is such a great tool. Such a great tool. Google's biggest acquisition plans for cybersecurity. This is huge. This is huge for any cybersecurity stock based on the valuation that Google is buying it for. This is Google's first large purchase. Again, it points to cybersecurity. $23 billion. Expect big bumps in Zscaler, CrowdStrike, PanW, Fortinet. Okay? I own CrowdStrike and I own Palo Alto Networks, PanW. CRWD and Palo Alto Networks. Both were good. We talked about this Motley Fool buy, okay? This is what you get from Motley Fool. This is why I like Seeking Alpha over Motley Fool. Motley Fool kind of gives you this pick, and then they hold it for like 5-10 years, and then they don't really kind of guide you as to when to sell it or when to trim it. That's Alpha Picks. Alpha Picks portfolio is so much better than Motley Fool's portfolio as far as performance and how to manage that portfolio. Seeking Alpha Premium is so much better than Motley Fool because they give you specific details and they allow you to drill in on this stuff. But their new pick is VLTO. And I looked at this one. We'll use Seeking Alpha to look at this. Veralto Corporation. So it's done really well. We can see the stock chart. It's a bottom left to upper right. The algorithm makes you 20%. You make 28% over the last 2 years if you buy and held. Average win is 5%. You win 63% of the time. That tells you that, again, this is at bottom left to upper right. It IPO'd, so it doesn't have that long of a thing. It's over 9 months. I'm sorry. You make 20% over 9 months because, again, it's a new one. So VLTO, if we go over here into Seeking Alpha and we look at this one, this is where I want to do the valuation. This is how you look at these stocks. You go and look at the chart, see if is it bottom left to upper right. Maybe it's a good chart. You don't even need to TrendSpider to do that. Find any charting program to do that. Now we can look at VLTO. It's not covered by the quant, so I can't see it. Well, let me go over to the valuation. What's the valuation of this? What's the PE? Well, the forward PE is 29. So they expect to make money at some point in time, but right now they're not making money. They don't have a PE. Let's look at their growth. How are they growing? 2.4% revenue growth year over year when the sector's doing 5%. Let's look at the profitability. Well, what's their profit margin? 58%. That's really good. Momentum, we can take a look at the momentum. 13% over 3 months, 30%. So it's beating the sector median by a large margin. If we look at the peers, what does it tell us? Rollins, RKO. If you look at this VLTO, it's outperforming. The only one is CLH, Clean Harbors. This one's beating it over, 1 year. Yeah, 1 year. But again, I'm not a huge fan of this, but I'll bring it to you, VLTO. If you want to do more research, let's see, Wall Street, how many people cover it? 14 analysts cover it. $100 price target. So it's a 1% upside. This is kind of why I don't like Seeking Alpha. I don't like Motley Fool. They don't give you a lot of stuff like this. They just send you this damn little email that says, hey, buy this one now. Water will be the new oil. Not my thing. BlackRock and Goldman Sachs beat just on earnings. This is, we're in earnings season. Earnings Hub is the greatest earnings tool that you can use. EarningsHub.com. It is 100% free. You can pay for it, but I just use the free version. I'm not affiliated with them. I'm not an affiliate. I am an affiliate with Savvy Trader, and the reason is because they provide my portfolio and stuff. I just like them. But Goldman Sachs and BlackRock, they beat. This is a big bank earnings. Like I said, United Health, Bank of America reports, Morgan Stanley tomorrow. The one that I analyzed was Netflix. And if we look at Netflix, it's a core portfolio stock, 528 reported, 442 is estimated. So again, that's one that I think is interesting. Now, education-wise, I'm going to do 2 quotes. And the 2 quotes are interesting because one is from Steve Burns. Great traders are profitable because they have become masters at managing uncertainty. They don't win because they can see the future. They win because they are certain of what they will do in the present moment when faced with uncertainty. I like this quote. It points to get a system that works for you, and if it's technical, backtest it. If it's your system, if your system's not working, change it. If you backtest your strategy and it's not working, that's why I like the 4-hour algorithm. That's why we can take something like Qualcomm. Okay, we'll just take a core portfolio stock that I like, and we'll backtest it here over 24 months. You make 21% in the algorithm. You make 56% if you buy and hold. I'd argue you find your entries with the algorithm and you just buy and hold. Your average win 12%. You win 32% of the time. But this is a bottom left to upper right trending stock. Now, is it extended? Absolutely. But you can see here when it was under its 200-day, this was an absolute buy. Chips were clear. Asking for or following someone else's trade won't make you a great trader or investor. That comes with educating yourself why that trader or investor did what they did. Building up your confidence and then making a decision on your own is key. That's why I like what I do. Okay, I provide the newsletter for free. I provide you my trades. I tell you why I make those trades. I provide you the 4-hour algorithm. I don't charge for anything that I put in that newsletter. So, following me, probably not a great idea because my portfolio management's a little different. Okay, and that's where I kind of, the next quote from Austin Silver. Trading is hard. Don't let anyone tell you otherwise. It can be systemized. Systems can be easy to follow. My system is super easy to follow. Staying emotional, mentally, and financially stable is hard. So for me, I find trading is easy because I can stay emotionally, mentally, and financially stable at all times. Managing risk and not being greedy takes focus, discipline, and commitment beyond the capacity of most. And that's where success comes in. It's not following somebody. It's understanding, hey, I've got a winner. It's understanding that when Apple was down at 160 and that company was undervalued in my mind. I'm on an iMac. I have an iPad Pro. I have an iPhone. I have an Apple Watch. I have AirPods. All of that tells me that Apple at 169, even though the growth may not be there, even though they haven't participated in AI, it told me it's a good stock. So what did I want to do? I wanted to add to it. The problem is it's become such a big portion of my portfolio, I don't add to it. But I would argue 200 is still your support. I think we're probably going to 250, but 200 is still your support. Do you want to add to it here? No. Something like Amazon. I said last week, Amazon, I'm adding to. Why am I adding to it? Because it got over the 188 support, and Jeff Bezos is selling at 200. He's only 30% through his sale. So when you get to 200, he's going to continue to sell. But just know, long term, it will be a good buy because I think it's going to be good. And so that education process is understanding why you're buying, why you're selling, managing your portfolio. You have to add to your winners. And when you find a winner, you add to it. When you have a loser, you absolutely get rid of it. Sedge, great example. Sedge exploded the other day. I sold at 70. It's at 24. I sold at 70 when I bought at 300. You have to understand that sometimes it's just get out. Put your money somewhere else. We can talk about DJT all you want. But you know what? Come to me in a year where DJT is versus just putting the money into Bitcoin. If you want to gamble, just put your money into Bitcoin. That's where I would say you do it. So, let's see. That's for Alto. Seeking Alpha. Okay. Let's do this. This is a social request. Mark from Spotify. Spotify has comments. I can comment on it. You guys can comment. Let me know what you're, if you want me to, if you're listening on Spotify and you want me to look at the stop, just comment below. I can actually reply to you now. I'll probably just tell you, hey, I edited it to tomorrow, unless I think you're just out of whack. oh my God, what do you think of, this stock? But what are you doing? I may just yell at you. But Mark says, great podcast. What are your thoughts on as an AI play? Okay, I don't know much about onsemi. So I would tell you, Mark, do your research, understand what that company does. I don't know. Okay, I can tell you the chart. I can go over the financials. I can look at that. What do I think of it as an AI play? I don't own it. I don't. And so I would say if you want an AI play, but you don't know what the company does, buy an AI ETF, buy SOXS, SMH, one of the chip stocks. But onsemi, we can take a look at it. Now, my algorithm makes you 61%. Buying and holding over 2 years makes you 56%. Your average win, 11%. So we know that there's volatility. We know that there's money to be made in trading this stock. We also know that it makes a good buy and hold 56%. You can't argue with that. Now, I would say when you got under this 200-day, it was a buy time because obviously every time it goes under the 200-day, it gets back above the 200-day. And in a semi stock, when we're in an AI market, that's one you play with. Now, I would also argue, looks like we have a negative 50-day, positive 200-day. You've got some volume levels here at about 71. I think your extreme support is 65. Your MACD, super low. Your RSI, pretty low. This would not be a bad buy to get back to $100 if the valuation supports it. Understand that I don't know what this company does. I don't know how well it's positioned in AI. So you're going to have to do that type of thing. I will rely on seeking alpha. Again, this is my system. When I take a look at this 1-year chart, it's upper left to bottom right. Doesn't instill a ton of confidence. What does the quant say? It says hold. $75, you're down below the mid-range on your 52-week level. That might be, might raise some red alerts. So from a quant level, it went to a hold when it was trading at 68. It's still in a hold. Now, this one was a strong buy up here at 100, and it kind of just trailed down. So I'd take the quant with a little grain of salt. When we look at Wall Street and it says it's a buy, there's 31 analysts, so that's a good amount of analysts that do it. $83 is the price target. That's a 9% upside from where we are today. When you look at some of these analyst revisions, and we look at it from the last 3 months, only one is bringing their earnings per share estimate up. 26 are bringing them down. 28% are bringing the revenue down. So that's where the red flag comes up is, hey, the analysts don't think this is a good one. Now let's look at the valuation of this company. It's only got a PE of 15. The sector is 24. Something is systemically wrong with this stock. So I would argue you want to go in and find out what systemically is wrong with the stock. You want to read these analysis. I don't do analysis of stock like this on semi. I'm not going to be able to go into everything. You can see the bulls say onsemi faces the risk of a glut of SiC power semiconductors in 2025 if auto and industrial demand don't recover. But the company is well placed to be a long-term winner in advanced power and sensing. The bears say onsemi stock became substantially overvalued after a significant decline in projected consensus revenue growth between 2024 and 2027. So again, that's how you look at these stocks. What do I think of it? I'm not buying it. I don't own it. What would I do as an AI play? I do NVIDIA. I do SMCI. I do Dell. I do HPE. I want the winners. I add to the winners. That particular stock, you can't time the bottom. So a stock that is looking at a glut, I want to get rid of it. I don't want to own that one. I want to look at that stock and say, hey, I'm not sure where it is. Now, what are the best chip stocks to own right now? They ask Seeking Alpha analysts. You can take a look at these. They go over NVIDIA, Micron, Qualcomm, Broadcom, Taiwan Semi. They asked Seeking Alpha analysts what they wanted to invest in now. Even one brings up Intel. In my mind, I don't want Intel. I got a bunch of questions about Intel. So, but again, that's how you go over these stocks. That's how you look at them. Remember my system. It is very simple. It is, I look at the chart and see, is this a stock that's moving upwards? If it is, let's take a look at a shorter term stock. If you're looking at a stock that is moving upper left to bottom right, don't time the bottom. I would rather move in a little bit from a weekly to a daily or a 4-hour and then try and see, okay, is it a trade? Because a stock that is long-term moving upper left to bottom right and you don't see new highs in the future or in short term, we could take a look at Palantir is a great example. Palantir is one that has recently broken out. It's at $28 right now. I said this was a $25 stock. Okay, why did I say it was a $25 stock? We can take a look at this. For a very long time, this was an upper left to bottom right stock. Now, as it started moving up, I didn't want to buy it here at $8. I didn't know if it was going to go to $6. Okay, but as you got to 10, it's a bottom left, upper right story. Very, very simple. Now, as you get to this $25, which provided significant resistance there about 3-4 weeks, we hit that and pulled back. Then now, is 25 now the new support level? I would say yes. I would say momentum in the market has changed for Palantir. That $25 is probably your support. So again, with on semi, I just don't see that type of thing. If we go and look at that chart from a long-term standpoint, I don't see that type of rebound happening just yet. I see it as extended on a weekly basis. And I see, a lot of people doubting that it can get back up here to 100. If you wanted to know where the bottom is, I would say that 200-day right there at 61 is probably the bottom. Wait until that 50-day starts moving positive. You might have a death cross here. This one may just continue to trade sideways. But I do not see a super, super long-term bottom left to upper right. I do here, if you anchor it here on COVID, but come on. From this high right here at 102, and then they're saying there's inventory levels and they don't have pricing power. That's the problem that I have. Let's talk about some scans. This is the 4-hour scans. These are scans that I do. And if you sign up for TrendSpider, you can do them yourself as well because I provide you everything. I provide you my 4-hour algorithm, 65-minute, 5-minute. I also provide you all the watch lists and scans. Exxon, you can see it right here, 113. Where are we going? Probably 120. Again, that's just one that you want to buy and hold for the long term. Disney is one that, hey, anything under 100 on Disney is a buy. It's going back to 120. At some point in time, this one's going back to 120. It's just a matter of when. Do you want to buy it right now? I would argue no. And the reason I would argue no is because the 50-day is still moving negative. You got this gap up here. You got some catalyst with earnings coming up August 7th. But I don't know what the catalyst is for this company to actually start moving. So I would argue if you want to buy it long term, buy it under 100. It'll get back over 100. But that's a hard one to actually sell because I do think that we talked about the consumer. What does Disney provide? They're a consumer play. Coke. Do not buy Coke, even though the algorithm tells you $64 to buy Coke. You buy Coke under 60 and you sell it over 60. This is just an inclination that if you want to add more because you currently own it, you can add more. But I would argue that you're seeing clear upper value area high right here at about 64.50. And you're trading at 63.81. The upside isn't worth it. Mara, all of the crypto stocks are soaring today. If you want to invest in the Donald Trump presidency, crypto's where to do it. Simple as that. I mean, it's very simple. You're trading $20.77. I think you pop up to $30 at some point in time on Mara. XLE. This is the only sector that it got a cross up. I would not fall asleep on energy. I think energy has been trading a bit sideways to down right now. I think energy gets a nice pump up. We talked about the 200-day. When you're under the 200-day on energy, at $90, you could wait for this one to pop. Now, would I buy energy, this XLE? No, I would pick your winners like Exxon, Chevron. There's a bunch of them that are in the newsletter today. MRO, which is Marathon, COP, even Boyle. Got a cross up, but I would trade Boyle on a little bit other one. There are a ton of stocks. We have Charter, we have Comcast, we have Take-Two, we have Starbucks. Starbucks, is this one finally coming back? You talk about timing one. I would argue again, the consumer is weak. This is not a luxury good, but these are upper level consumers. Now, I would argue that at some point in time, you close this gap, okay, at $88. If we look at this stock, this is a good long-term stock. It has fallen, okay? Are you under the 200-day? Yes. We talk about good management with good products, with good earnings, and everything of that sort. This one has bad management. So I don't want to buy this at 73. I would rather wait for it to get to 80 so that we get back up to 100. That's a nice 20%, a huge move right there. You can make 20% in this stock if you wait for it to, you don't want to time it. So Starbucks, do you want to trade it? Well, the 4-hour algorithm loses you 8 to 18%. I would argue over the last 2 years, this has been a bad trade. It's been hard because it continually gets you in. I still argue that this is a $90 to $100 stock. So buying at 73, are you holding it? We can look at this. I think Starbucks has a very simple, easy fix. Offer food. I mean, you look at how well Dunkin' Donuts is doing. Starbucks just has a horrible thing, and they make their customers wait. The app hasn't been doing well. Howard Schultz wrote that thing. The valuation is incredibly extended. 20 PE. Sector is 14. Dutch Brothers has been the coffee maker that's moved well. We got a bunch of leveraged ETFs, TSLQ, NVDS, AAPD. They're all down. Might indicate, hey, we're a bit extended. But, there's a ton of stocks that I've said over, even Cleveland Cliffs. Cleveland Cliffs was down. We were just talking about this. This was down 3%. It's now up 1%. It's now up 1%. And I made the mistake of telling folks, ooh, you might want to, sell out of this one right now. It's up. I mean, this one opened up at 1580. It's now at 1645. So, there's money to be made in this market. Again, the Linktree has everything. Sign up for TrendSpider. Sign up for Seeking Alpha Premium. Alpha Picks if you just want the picks handed to you. Again, it's a healthcare stock today that is up 80% in 1 year. Webull, again, I use it as my sports betting platform because I pick like triple leveraged ETFs. I do small bets in there. I do large bets when I'm sure of it. But it's usually smaller. Like I said, the Ford stuff, I own 3 shares of that. It's very large Apple, very large iBit, very large Uber. And those are the 3 largest stocks that I have in there. So again, it's grown incredibly, but those are the 3 largest stocks. I think I'm about 80% invested, 90% invested, somewhere in there. And I buy little stocks here and there. I own Snap. Snap has just been a monster, I think, in there as far as it snapping back to it. It's this is one that, had that gap up in earnings, and it's just continued. I mean, bought down here because this gap, there's a gap that is still filled to 1719. I mean, again, that's going to fill. At some point in time, that's going to fill. I think you see a huge August earnings on this one. MACD, kind of on the oscillator. RSI, not doing anything. Just kind of trading sideways. Its valuation is crazy. The last October earnings, if we see what the stock did last time in August, if we look back, this is why I like TrendSpider, is you can go and take a look. Let's look at the last August, okay? Last August earnings, it soared down into October, which then provided you a huge upside. Heading into the election, probably the same thing. Maybe you get back to this 200-day, 28. Again, the 50-day is moving positive. So if you have any questions, hit me up. I will be back tomorrow again. Spaces today at 3 o'clock. I'll talk to you later. Bye. Haktua. SQQQ. What the hell is CQQQ? China. Tunji. I don't like China. I mean, it's not like I love the country of China. I love the people of China. I just don't like investing in China until they can show me some upside. I mean, what makes you think that's a good bet versus something like Bitcoin, versus something like Eli Lilly, versus something like Meta, versus something like Apple, something like Amazon? I just don't like it. I mean, again, look at the holdings of it, but China as a whole, for me, it's not my thing. Morning, Daniel. Yeah, Chris says the same thing. That's what Gary's going to tell you. Same thing. I mean, there's great opportunities in this market. On the West Coast, grocery outlet, bargain store. Shopping there saves me money, but buying at stock, uncertain if it's a good choice. Let's see, Jeremy. Go. Grocery outlet holdings. I had heard about this one. That weekly does not look good. Their last earnings gap down. So I would worry about this. And groceries, here's the thing I know about groceries. Grocery stores have such tight margins. It's tough. And you look at this valuation, the PEG ratio, their growth, it's not there. Their PE is extended. You look at their growth here. Revenues, they're growing 8%. Sector is 2%. The quant says sell. Let's see. Why is it risk doing badly? Has characteristics with historically poor performance. The company has 3-month performance. It's the momentum. The momentum's killing it here. But I would argue the entire thing, profitability, momentum, revisions, it's just not a good thing. Grocery stores are tough. I mean, again, that's why I kind of like Walmart, is they're not just groceries. But Larry, that's what I would say, Jeremy. Do I think that this gap gets filled? No. The valuation just doesn't support it. When you look at the weekly on this one, yeah, I mean, that's upper left to bottom right. Just not. It wouldn't be something. I mean, it looks like it IPO'd here and went up. And then we hit COVID and it kind of died. And then in 2021, it got a bit up. If you shop there, it might make sense to throw $500 in there, depending on your portfolio size. I'd just get ready for it to probably go to 10 rather than 30. That's my take on it. Okay. It is 9:51. I usually hang out till 10, but I do have a spaces today and I got to go grocery shopping. I'll do the indices check. Let's see. How much am I up today? Because Apple was up. Apple is way up. I'm making a good amount on Apple. Yep. Ironically, the rest of my portfolio looks to be underperforming. Although, yeah. No, I'm overperforming. So I'm at 0.78% gain. The market's at 0.4. July 10th was my portfolio high. So, okay. Let's see. TransFi is so good. Okay. You're welcome, Jeremy. Wait until they turn around and all of a sudden declare, we're profitable, and then it goes to 35. I don't think it will, but I would just worry about that one. That's where I would worry. Cardinal Health, that is an alpha pick. I think that's still in the alpha pick portfolio. Let's see. I can go to Seeking Alpha and I can alpha picks portfolio. CAH is in the portfolio. They bought on March 1st. They're down 16% on that one. My dad owns this one, and I'm in the middle of, it's a very small position in my dad's portfolio, but I'm in the middle of trying to determine, do I like the pop? He's been in this for a very long time, so he's up quite a bit. But I like how this one has dipped down. Now, healthcare under Trump will not do well. Takes Broadcom, exits Intel among Q1 moves. That's from May. A little bit older. The valuation is there. I mean, the valuation is just really good. It's the growth of this. And it's the levered free cash flow. It's just costing them a ton of money. And the momentum's bringing them down. Now, revisions, 14 up, 2 down. I would argue that this weekly kind of looks like, again, if you're putting in that support at 94, the 50-day has provided pretty good support on this one. Once, twice, 3 times it almost touched and then it took off. You're breaking it. But I'd rather wait until you have some type of confirmation. And the algorithm makes you 48%. It has you out. It probably will get you in today. So this is I think it's in the watch list, so you can scan against it here in TrendSpider. Yeah, it's on the daily stock pick watch list. It's in there because it's an alpha pick. I mean, honest to God, it's an alpha pick. So I can tell you that because it's March and we're in July, so it's 3 months. They try and not tell me not to say anything for 3 months. But Cardinal Health is one. I like it. It just hasn't performed really well for alpha picks. Again, they got in March 1st. And so that was near the high here. It looks like around 112. But I don't like this staircase where you're setting lower highs. I mean, lower high, and then it continues lower high, and now you're setting lower lows. That's what worries me a little bit about this one. So I might take the trade, but I think there's better trades in the market to add to a long-term portfolio. Just and the only reason is nothing other than if you go to the ratings. I mean, it's significantly a hold. You only have 17 analysts. The average price target is 112. But take a look at how it's run up against the price target. And are we just getting this pullback because it's, the analysts just ran up too much? So, but I like the play. Just because it's a little bit risky, and I don't know if this $95 range kind of provides the pump back up to 100. I mean, that's not again, that's a 5, 6, 7% move in a few months. If the algorithm tells you to buy in, its average win is 8.5%. Problem is you only win 34% of the time. I mean, the safety of 48% win is good. I would argue that this 3% move that you had, you should have absolutely gotten out on this candle at about 102. If we look at how does 100 set up for this one? If we just put a line at 100. I would argue that this is probably the better support here at 95. That's probably a decent support. And then if you wanted a second support, it's probably here before it pulled off at about 80. So I would say this range is probably, once you have some type of confirmation or something within this range, it's probably not a bad bet. Am I taking it? No. You know, you have to know, you know, am I putting $50,000 into this one because I'm absolutely sure of it? No, I don't know healthcare. So you have to know where your sweet spot lies. And my sweet spot is big cap tech. Big cap tech. It's Amazon at 194. Absolutely add to 194. If you don't own Amazon, absolutely add to it at 194. Yes, it's weak. Yes, you're on the downside there. I mean, Amazon. Just buy it. Let's see. Core portfolio. Eli Lilly. Just buy it. Meta. Under 500. Just freaking buy it. In my mind, Netflix doesn't mean you won't, you know, get killed on the next earnings, but just buy it. Nvidia. Just buy it. Shopify, I like it. Just, it hasn't moved. Uber, I like to get 80. That's at 71. I like that one back at 80 after the earnings. This core portfolio is pretty good until it's not. And so I'd argue that these are stocks that you want to take a look at. And, like Costco's up 0.5%. Am I buying it here? No, I'm not. Look at Costco. If I sold it when it crossed the MACD cross down, it's at 890. I sold at 847. So WVF, I will tell you, if you don't have a list of 5 stocks that if they pull back, you're just going to buy them, create that list today. Just create that list. Go around your house, see what you use. Look at the car that you drive. Where do you shop for groceries? What groceries do you buy? Put 5 stocks in there, and that's it. And that's where you want to go to. But am I up 1% now? I think I'm probably up 1%. Okay, it's 10 o'clock. Let me see. I'm logging into Fidelity. See where I'm at. I think my probably Webull portfolio is up more than 1%. It's heavy crypto. Crypto and Uber. Yes, I am up 1.14%. Market took a leg up. Let's see. Webull, I am up 4.2%. It's heavy crypto. So, okay, I'm out of here. I will be back tomorrow. See you guys at 3.